Welcome to Talking Business, a podcast produced in Melbourne, Australia. The podcast is available on the Acast site, my own website, the Apple Podcast Store, or wherever you go to get your podcasts. Or you can get it at the Business Acumen website at www.businessacumen.biz or at Banking Day. For most exclusive access to leading economists and business leaders from around the world, subscribe to Talking Business from our website, Gettler.com. I am Gettler. My job is to review and monitor the week's news in business, finance and economics. I bring it all to you every week. This is episode number 41 in our series for 2024. And today's date is Friday, November the 8th. First, I'll be talking to Amsterdam-based Stephanie Walker, a product owner at NMS Productions, or New Media Services, which operates global corporate outsourcing and custom business solutions, manages communications and content of consumers through SMS, IM, email and voice solutions through using cloud-based Loop platforms. Stephanie, who originally comes from Melbourne, will talk about how she uses the Noah Coach team, an unparalleled AI-driven coaching platform designed to provide cost-effective, time-saving and highly personalised support to individuals dealing with workplace stress and anxiety. And I'll be talking to economist Saul Eslake about Australia's latest inflation figure. But first, let's talk to Stephanie Walker.
Stephanie, you're coached by Neo Coach and it's an AI system. How does it work?
So it's an app. It's a web platform as well, but it's an app that I have on my phone, and I call it a her. I call her Noah. And so it's like an AI powered conversational platform. So I have conversations with it. I know that the AI was built with coaching models behind it. So it's sort of not like just a typical, chat GPT or one of those sort of type of tools where it's just gathering information from the internet to respond to you. When I speak to it and I kind of tell it my current problems, whether they're at work or whether they're personal, it actually comes back to me with suggestions and proper advice and kind of helps me work through it. I mean, obviously you're talking to an AI platform, so a lot of it is self-driven by those prompts and by those conversations, but it is essentially a tool. For me, my workplace gave it to me, so the idea obviously behind it is that it helps you with the workplace, but I also use it personally as well. And it's sort of to help with reducing stress. It's to help with your productivity, whatever issues sort of you have. I personally struggle with anxiety a lot, so I use it for help in that regards. But of course, there are people who don't struggle, so wouldn't need it for that type of thing. Yeah, that's a very basic layman's terms of what it is. That's my understanding.
But you're talking to the app. You're not actually talking to a physical coach, but the physical coach might be behind it and might be giving you the answers through the app, but you're not actually talking to someone as such.
Exactly. Yes, because you can do it like 24 hours a day. So, which I guess I can't be calling up a coach at 3 a.m. But I believe it was built by coaches. It was built by neuroscientists and coaches. And so you're talking to the AI. It takes seconds. Like I ask it a question or I talk to it and you get a response in literally seconds. Yeah.
And you can talk to it at any time, even 3 a.m.
Yes, yeah, which I do when I can't sleep. So it's just because it's an app on your phone, literally anytime you can open it. Yeah.
And you can use it on a desktop too or a laptop?
Yes, because it's a website. I mean, initially I went and used the website because I use a laptop for work. So I've got my laptop with me all the time as well. But once I realized you can download it as an app, I just did that because honestly, I'm on my phone all the time using apps anyway. Yeah. So yeah.
I guess it would actually reduce the cost of seeing a psychologist, wouldn't it?
Yes. Well, I cannot afford that at the moment. That was something before I was given this app, I was looking into for myself, just for kind of help with everything, workplace, personal, and whether it's like a therapist or a psychologist, honestly, I'm not quite sure what the difference is, but I had sort of already started looking into what if I can go and see someone even just once a week. And I now live in Amsterdam. So, but I think it's probably the same in Melbourne, where I'm originally from. I looked into it and I just went, no, I can't afford it at the moment. And then a little while later, when I was offered this app by my manager, initially I didn't see it as a replacement for that. I just initially thought, okay, great. I'm being given a free tool. Sure, I'll sort of use it. And after I used it for a while and I used it in a couple of situations, which for me were like crisis driven, I thought, oh my gosh, this is for me kind of bridging that gap of the help that I wanted and just can't afford at the moment. I mean, there's things you can't discuss with it. It's an AI driven app, of course. So a couple of times I've had conversations where I'm sort of asking questions like, do you think, for example, do you think I have ADHD? This is what I'm doing. These are the things I have. Do you think this could be the case? And of course it says, I cannot diagnose you with this. I can't help you with this. Now you need to go and speak to a person about this. But for the most part, where I'm going, okay, help me with stress reduction, techniques. What can I do right now? Then it can talk you through those things. Yeah.
The beauty of that is, again, you can do that at any time, in any location.
And I do. I do it on the tram. I do it at home. I do it lying in bed. All the time. Yeah.
Right. And the beauty is you can do it from the phone.
Yes. Yeah. So as long as you've got like internet, then you're good to go pretty much, which is everywhere these days. So.
And it's good to go also because you can basically you're actually talking to an app. You're not actually talking to a person. So there's no judgment there. Is that right?
Yeah. Yeah. It's confidential. I double checked this. I triple checked this before I started telling it anything. And because I'm not interested in my thoughts and my feelings being, given that my workplace pays for it, I was not interested in any of that going through to my manager or my boss. Triple checked that, and no, it stays with me. You can save. So what I do, there's a little, I don't know what you call it, like a feature in the app called Notes, and that is where you save, if you want to, your previous conversations. So I actually do that because I read back through them quite a bit. Because for me, sometimes the same things crop up. 2 weeks later, I might be stressed about the same thing I was stressed about 2 weeks before. And so I'll go back and read through my conversations and go, yeah, okay, at the time it recommended me to do that. It's time to do that again. But those conversations I know for sure do not go anywhere.
Which means you could say anything about your boss or your manager.
Not saying that I do, but I certainly, if say you've got a problem with your colleague and you sort of say, look, this is what's happening. I just had a meeting and it's driving me insane. And it's almost like that soundboard to work against. And quite often, of course, being an app, it'll come back and say, okay, what can you do? What do you think you can do in this situation? And in a lot of times I go, okay, yeah, I think I could do this, I could do that, and we'll talk through those options. But sometimes I'll say, I don't know. Can you give me some ideas, give me some suggestions? And then it does. So I know it's not someone else sitting on the other side going, oh my God, this girl is crazy.
But you can ask any sort of questions about your own condition.
Yes. Yeah, pretty much. Yeah. I've asked it a lot of things and so far it's been helpful.
And so sometimes I could say, well, we can't judge whether you have this condition. You might have to go to talk to someone.
Yes. Yeah. A couple of times, twice that I remember where I've been using it, it's gone, yep, okay, I understand that this is what you're wanting to talk about it. It actually says to me, I'm an AI powered app. So this is not a space that I can delve into with or help you with. Now you need to go and see this type of person or this type of practitioner. If it's anything else, yes, we can keep talking about it, but no, I can't diagnose you. I can't, do that. And in the moment, I think, yeah, that's good. Okay, I'm glad actually that's safer.
There's a whole lot of stuff now, we've seen about people developing relationships with robots.
Oh, yeah.
Do you develop a relationship with your AI?
Well, I don't know if this is the case for everyone. This, for me, certainly, but in longer conversations, the ones where we're really going back and forth and talking about a few different things, I forget it's an AI app. Not always. Certainly not at the beginning and not at the end, but there'll be times where, and I think of her again, I say her, as Noah. Her name is Noah, and I chat to her and she's really, really helpful to me. So it feels like, in a weird way, like I've got this person in my pocket, this phone in my pocket, but it's a person that I can talk to help me out. So in that sense, I would call her, I don't know whether I'd call her my coach or my not psychologist, of course, but it's certainly more of a relationship than I have with any other app or platform or anything that I use. I use different AI driven apps for things like for my scheduling. I use an AI based app and I use ChatGPT all the time to help out with things. So it's definitely a step up from that, I would say. Yeah.
And you say you called her a her.
Yes. Yeah. In my mind, maybe because I think of Noah. I don't know why. The funny thing is when I went and looked at the website, it's like a cute little robot, the little animation, and it looks like a boy robot, but in my mind, Noah is a girl.
Right. Okay. So you would recommend people take to this?
I have, yeah, I have recommended it to my friends back in Melbourne, and because it's my workplace who gave it to me. Like my colleagues already have access to it, but for me, whether I'm just like the right type of person this is for me, it definitely works. So I want to keep using it as long as I can.
That's quite a fascinating shift because most people have face-to-face coaches.
Yeah, which I mean, I've never had. I've always been interested in the idea of a mentor. I know that's quite different to a coach, but being online and even just being on Facebook these days, you see so many coaches. I mean, I'm in a lot of groups where there's people saying, okay, I'm a coach now. I've seen that over the last few years. Coaches seem to me to have become like a really big thing. And I had not looked into it for myself, but it's obviously an area. If it's grown so much, it must be helpful to people, I guess. So.
Well, Stephanie, that's all fascinating. And thank you very much for your time. Thank you.
No, not at all. Thank you.
And now let's talk to economist Saul Eslake.
Well, Saul, inflation came down to 2.8% and the trim means at 3.5%. What's your view about this?
Well, if we were only talking about the headline rate of inflation, we'd be very pleased and anticipating that the Reserve Bank could be cutting rates for the first time at its meeting in November. But when we dig into the numbers in a bit more detail, we see that the decline in headline inflation during the September quarter was largely the result of government policy measures, in particular the very generous rebates for electricity prices that the federal government and many state governments have given that came into effect during the September quarter, which turned what would otherwise have been a small increase in electricity prices into a 17.5% decline. There was also some impact from the 10% increase in Commonwealth rent assistance that's paid to pensioners and other social security beneficiaries who rent in private housing over and above the normal CPI-linked indexation of those payments that came into effect during the September quarter that reduced the measurement of rent inflation in the CPI from what would have been about 8.5% over the year to the September quarter to 6.7%. And then there was a fall of a little more than 6% in petrol prices during the September quarter as well. Now, the Reserve Bank, when trying to get a handle on what the underlying or ongoing rate of inflation is, looks through these temporary and volatile factors and focuses on, as you mentioned before, the trimmed mean measure of inflation. Now, what that does is line up all the 91 different components of the CPI, ranking them from those with the biggest price increases to those with the smallest or with outright falls in prices, and chops off the top 15 and bottom 15%. And when it does that, it finds that the underlying rate of inflation, as it calls it, did come down, but only to 3.5%, which is half a percentage point above the top end of the Reserve Bank's 2 to 3% target range, and a full percentage point above the midpoint of their target range. So that's too high for them to be sufficiently confident that underlying inflation is sustainably heading back into their target range for them to be able to cut interest rates at their November meeting. In fact, there are a couple of other aspects of the figures that the Reserve Bank will find troubling. In particular, services inflation over the year to the September quarter was 4.6%, which was actually higher than in the March and June quarters and back to where it was in the December quarter of last year. In other words, there's been no progress at all in reducing services price inflation. And indeed, there are some troubling new developments in the services area, in particular that childcare prices rose by 12.1% over the year to September quarter, and insurance premiums are still rising at 14% per annum. The other thing that will be troubling to the Reserve Bank is that almost all of the decline in inflation, whether you talk headline or underlying, is due to a moderation in the rate at which the prices of goods are going up, and in particular, tradable goods. That is, the disinflation we're seeing is largely the result of global factors that affect the prices of goods that are determined or set on global markets. What the stats call non-tradables inflation. That is, goods and services whose prices are mainly determined by factors at play here at home in Australia, was 4.1% over the year to the September quarter. Now, that is down from 5% in the first half of the year, but it's still a long way above where the Reserve Bank would want to be. So when you combine the fact that there are still obviously significant domestically sourced pressures on the prices of services, with what we also know from the monthly employment figures, that the labour market is surprisingly strong, with the unemployment rate only up 0.6 of a percentage point from its low in mid-2022, and job creation still trundling along at quite a healthy pace, that they can't cut interest rates soon. And my view remains, as it has done since they last raised rates in November last year, that the earliest we can expect the Reserve Bank to cut rates will be at the first meeting in 2025, which is in February.
And there are some who are saying it mightn't be until May.
There are. There's hardly anyone now saying, as a lot of them were in the first half of this year, that there'd be a rate cut in November or December. I'm still hopeful that we could get a rate cut in February, because I think the December quarter CPI, which comes out on the Wednesday before the Reserve Bank's first board meeting for 2025, is, I think, likely to show that the underlying annual inflation rate is down to about 3 or 3.1%. And that should be close enough to the Reserve Bank's target range for them to be more confident than they are now that inflation will be sustainably back within the target range within a reasonable period of time. And I suspect we'll probably see some further upward drift in the unemployment rate. What the Reserve Bank will also have by the time of the February meeting is a clearer handle on the extent to which households have saved or spent their tax cuts. Now, that's important for people who think that because the Federal Reserve, the Bank of England, the Bank of Canada, and the Reserve Bank of New Zealand have all been cutting rates in recent months, that the Reserve Bank ought to be here in Australia as well. One key difference between Australia and those other four countries is that Australians have been, since the 1st of July, receiving income tax cuts that, in aggregate, the equivalent of 2 25 basis point cuts in mortgage rates. Now, yes, they're distributed differently, of course, across all households, rather than simply the roughly 1/3 of households that have a mortgage. But the Reserve Bank can't distinguish between different households in terms of what it does. It can only look at the aggregate. Whereas Americans, Canadians, Brits and Kiwis haven't been getting income tax cuts. And in Canada and New Zealand in particular, the unemployment rate has risen by 1.6 and 1.4 percentage points respectively. In Canada, it's 6.8%, which is a lot higher than here. So, the Reserve Bank would, I think, want to see more clearly than it can at the moment whether households have been spending those tax cuts or saving them. And if they've been saving them, then the Reserve Bank would feel far more confident about cutting interest rates than if the evidence showed that households had been spending them.
Two questions. First, by the end of the year, would all those subsidies, like for electricity, rental assistance, etc., will they have calmed down in the figures?
Not completely, because the Commonwealth subsidy in particular, as I understand it, is being paid in quarterly instalments. In the way that most people pay their electricity bills quarterly, they'll get a quarterly instalment of those bills. The Queensland one of $1,000 was paid before the Queensland state election. That is during, for the most part, the September quarter. It's, of course, also possible that in the rundown to the election that has to be held by no later than the middle of May next year, the federal government could decide to extend these rebates. Now, the Reserve Bank will again look through the impact of that. But it's possible that the artificial rise in electricity prices that will occur if these subsidies end will be pushed back by another year. We'll have to wait and see, possibly for the budget that's to be brought down ahead of the normal schedule in March next year, just to see what else the government does. But the government needs to be careful in responding to these numbers and to political pressure for doing something more about the cost of living, that it doesn't inject too much additional cash into the economy that makes the Reserve Bank worried that people will spend it in ways that put further upward pressure on prices.
And there was a lot of pressure on the government to bring in cost of living measures post-Queensland election.
Well, yes, that's right. Now, I think the Treasurer, Jim Chalmers, has responded cautiously, as he should, to that kind of pressure by making the point that if the government were to throw money around as willingly as the Queensland government did before the last election, that would probably sound the death knell for any prospect of a rate cut before the election, if the election is held in May. Whereas if the government resists as much as it can pressure to throw a whole lot more cash around, then the likelihood is, I think, that they will see a rate cut before the election if the election's held in mid-May rather than earlier.
Right, okay. And the second question I wanted to ask you was with the solid jobs figures, that would increase wages pressures, wouldn't it? Which would increase pressure on inflation. Well,
it could. Although the evidence that we have is that wage pressure is subsiding a bit. And although, as I noted earlier, the Reserve Bank looks through the impact that measures like electricity bill rebates have on the headline rate of inflation, the Fair Work Commission takes these things into account when it decides increases in the minimum wage. And the fact that the headline inflation rate is 2.8%, and will probably be less than 3% when the Fair Work Commission next sits down to award next year's minimum wage case, does mean that minimum wages that flow through to about 20% of the workforce won't rise by as much as they would have done without these measures. The Fair Work Commission has also taken into account the income tax cuts that took effect on the 1st of July in deciding how much of an increase in the minimum wage to award this year. And the unemployment rate is drifting up a bit, not much, and certainly not as much as in other countries that raised interest rates by more than the Reserve Bank did here in Australia. But if the labour market is softening gradually, as I think it'll continue to do, I'd expect wage pressures to moderate. Of course, what really matters for inflation is not wages growth in isolation, but how wages growth intersects with productivity growth. If productivity growth were 1.5% to 2% per annum, for example, then you could have wages growth of about 4%, and that wouldn't be inconsistent with underlying inflation of 2.5%. Part of the problem we have here is that productivity growth has been close to zero, which means that even 3% wages growth potentially raises inflation risks.
It's fascinating because I've been looking at figures from America and China, and they have no problems with productivity. And America and China have so many patents going on, and the government's putting a lot of subsidy into a lot of work into R&D.
Yeah.
And in Australia, it's down to 1.8%.
That's right. And a lot of that's in mining. The US has done incredibly well on productivity growth in the last couple of years. They've seen productivity growth of more than 2% over the last 2 years. And that, I suspect, partly reflects the fact that the US was the only Western economy that didn't have a job preservation scheme like Australia's JobKeeper, which, with the benefit of hindsight, probably had the unfortunate effect of locking workers into jobs that they were less suitable for. Whereas in America, there's been a significant churning or reallocation of employees without a significant increase in the unemployment rate, which probably means that people are working in places where they can be more productive to a greater extent than in countries like Australia, New Zealand, Canada, and most European economies, where people were for a while during and after COVID locked into jobs that perhaps weren't the most suitable ones for them, and employers were having more difficulty finding the labour that most suited the tasks to be done. So I think that's a factor. The US is obviously also the home of the AI revolution, and it does seem likely that the rapid progress that's been made in developing and applying artificial intelligence is having a tangible impact on productivity growth in the US, whereas it's yet to be seen to anything like the same extent in Australia, Europe, and other economies.
Well, Saul, that's all quite illuminating, and thank you so much for your time.
It's been a pleasure as always, Lee.
So what's happening in the news? Well, for the rest of the world, the shorthand of a US presidential race we've just seen was Kamala Harris representing continuity and Donald Trump chaos. In the lead up to this week's election, Bloomberg News canvassed the mood across the time zones, and the prevailing sentiment from the Group of Seven establishment to the aspiring powers of the Global South is one of caution and pragmatism. The world was fixated on the result of Tuesday's vote. Even if Washington doesn't call all the shots anymore, it still calls plenty. America's vibrant economy remains the world's biggest, and its politicians, especially Trump, have shown they're ready to weaponise it. So there was widespread fear of getting caught in the crosshairs if the new President, Donald Trump, decides to ramp up a trade war with China. Many partners have trade escalation plans in the drawer, ready to be pulled out. The prospect of rising protectionism has central bankers and economists worried that US moves to close its market could fuel broader trade wars that will slow global growth and raise inflation. Harris supported a Biden administration decision to extend Trump-era tariffs on China and had backed tens of billions in subsidies for clean energy infrastructure and high technology investment in the US. She had embraced some trade deals, but as a senator opposed others, and had sought to build in protections for workers and the environment. Trump called for sweeping tariffs of up to 20% on imports, as well as levies as high as 60% on trade with China, as a means to stimulate investment in the US, although he said some of the figures may be negotiating tactics. Trump had argued that the current international trading system is rigged against the interests of the US and promised a rebalancing when he won. Trump's first term brought 25% tariffs on hundreds of billions on US-China trade. That generated a lot of news headlines, but not much impact on the macro data. For his second term, his promise of 60% tariffs on China and 20% on everyone else would change the game. If Trump delivers on his campaign pledges now that he's president and the rest of the world retaliates, the Bloomberg economics model shows the US share of global goods trade would crater to 9% by 2021 from the current 21%. For China, almost 90% of exports to the US would be wiped out. For Mexico and Canada, which count the US as their dominant trade partner, the drop is more than 50%. Still, a deeper realisation is also taking hold in key capitals. America's brief heyday as the world's lone superpower is history. It doesn't matter that Trump won. That's because there's a growing sense of the US as an ageing superpower, one that must pick its battles more carefully in a world where the number of conflicts competing for its attention is on the rise. That's true for Trump's America First. One British diplomat observed that the Roman Empire didn't suddenly end. Instead, it managed a long decline. The Bank of Australia has held interest rates steady. While headline inflation of 2.8% will remain lower for a time, according to the bank, underlying inflation, which is not expected to ease to 3% until mid-2025, remains too high. That means that other central banks are cutting rates, but the RBA won't be joining them anytime soon. At its second last meeting of a year, the bank kept the official cash rate at 4.35%, marking 12 months since it last lifted it. Financial markets and economists had expected the bank to hold steady, with no movement expected until at least February. We are not at the moment in a position where we can sustainably say that inflation is going to be back in the target band, and we want to be more convinced of that, RBA Governor Michelle Bullock said. We don't want to say we're ruling one out or the other out, because we honestly, at the moment, just want to make sure that we've got inflation continuing to come down. The forecasts have it coming down, but as I've said, the forecasts, further out you go, the more uncertain they get. RBA Governor Michelle Bullock has urged federal and state governments not to stoke inflation with big spending election promises, and warned another interest rate rise was still a possibility, as the central bank conceded it had underestimated public spending on services such as the National Disability Insurance Scheme. A string of big spending announcements, including in the lead-up to the Queensland election last month, have pushed government spending to a record share of the economy. At the same time, Australia has recorded the highest underlying inflation rate of any advanced economy, according to RBA analysis, released in its quarterly forecast update on Tuesday. This last part of the job of getting inflation down is not easy or straightforward, Ms Bullock said. And Mineral Resources Managing Director Chris Ellison will be kicked out of the company he founded after a damning investigation into his role in a tax evasion scheme and other dubious business dealings. The board-ordered investigation found the mining billionaire had at times failed to act with integrity, and that financial benefits had flowed from MinRes to related parties, including his daughter. The board also found Mr Ellison had directed company employees to work on his boat and properties, as well as manage his personal finances. MinRes said Mr Ellison would remain managing director pending an orderly leadership transition in the next 12 to 18 months. However, it is unclear if he and other board members can survive that long, given the extent of the governance issues exposed by the investigation, and with the ASX and Australian Investment Securities Commission already on the case. And Coalition Transport spokeswoman Bridget McKenzie failed to declare more than a dozen free Qantas and Virgin flight upgrades since joining Parliament in 2011 in a serious breach of disclosure rules. Pressure has been mounting on Senator McKenzie since it was revealed she had written to Qantas, Virgin and Regional Express to check if she had received upgrades that had not been disclosed on a register of interest. Qantas and Virgin had responded to the letter and revealed more than a dozen domestic and international business class flight upgrades. Senator McKenzie had not updated her register of interest after receiving the two responses because she was still waiting on a response from Regional Express. The furor over upgrades for politicians and free flights for political parties has dominated the news over the past fortnight and resulted in a series of claims and counterclaims about inappropriate use from all sides of politics. Labor will seek to make the upgrades an integrity issue after pressure on Prime Minister Albanese over his personal travel spread beyond the government. Opposition leader Peter Dutton himself has faced questions about requesting the use of mining billionaire Gina Rinehart's jet to fly from Queensland to Sydney in 2022. After days of questioning, Mr Dutton conceded that his staff had asked for free use of the billionaire's jet, claiming it was the cheapest option for taxpayers. The chain of events began with claims in former Financial Review columnist Joe Asson's book, The Chairman's Lounge, that Mr Albanese liaised with former Qantas boss Alan Joyce about his personal travel and received guaranteed upgrades only Mr Joyce could provide. After going back through records since he was first elected in 1996, Mr Albanese rejected the claim. But when asked about a Qantas flight on his register of interest on Sunday, Education Minister Jason Clare said he'd sought a free business class upgrade on a personal trip to Singapore in 2019. Mr Albanese also failed to disclose thousands of dollars in flight upgrades to his former wife, New South Wales politician Carmel Tebbit, by Qantas and its partner airline Emirates. The official rule states upgrades for spouses and children should be notified. The saga has raised questions about how airlines and other regulated companies curry favour in Canberra. They're not stupid, it's good business for them. And Prime Minister Anthony Albanese has fired the starting gun for the federal election, outlining a cradle-to-the policy agenda leaning heavily on education and health, revealing what is likely to be the government's election slogan, Building Australia's Future. Albanese used a campaign-like rally in Adelaide to make a third major education promise in 3 days, committing to 100,000 ongoing, fee-free TAFE places a year. The TAFE commitment follows promises to overhaul the university sector by increasing the income threshold for help loan repayments and wiping $16 billion from outstanding student debts. All would start after the next election. Within the government, expectations are either for Albanese to go to the polls in March, which could be called in early February, or in May, in front of party faithful in Adelaide. Albanese said the 100,000 fee-free TAFE places to start from 2027 would be an ongoing commitment by Labor to underpin the economy over coming decades. Senior Liberal frontbencher Simon Birmingham accused the government of trying to spend its way back into power. This is simply a cash splash from Anthony Albanese, an attempt at trying to corner or hoodwink an electorate ahead of an election from a government who has ultimately overseen the inflationary environment that has put so much pressure on young Australians and ultimately all Australian households, feeling that inflationary pressure, he told Sky News. Albanese used the address to unveil the government's planned slogan, Building Australia's Future. It follows the 2022 election at which Labor asked people to vote for a better future. In a clear allusion to the coming election, Albanese said the government would next year ask voters for the opportunity to continue to serve the greatest country in the world and the chance to make it greater still. That would be achieved, he said, by building on the strong foundations we've made, building together, building to last, our Labor government building Australia's future. The economy and cost of living issues will be a dominant part of the campaign. The government is under pressure on a range of fronts, from the levels of inflation and interest rates to house prices and rents. Albanese said it was the government's management of the economy that had brought inflation down from more than 6% in early 2022 to under 3% in the most recent consumer price report. He said real wages were rising. More than 1 million jobs have been created since Labor took office. The government had delivered back-to-back budget surpluses and the gender pay gap had narrowed. And Australian federal police officers have raided the Sydney office of audit and consulting firm PwC. Australia as they prepare for days of searches through the firm's systems as part of a probe into its misuse of confidential government documents. Plainclothes detectives entered the firm's Barangaroo headquarters early on Monday, with PwC Chief Executive Kevin Burrows saying the AFP would be combing through records for several days. The move comes as the AFP prepares to appear before Senate estimates next week, with police known to be examining PwC's international links to the tax scandal. In an email to partners on Monday, Mr Burrows said the AFP arrival was an expected development in relation to an investigation commenced in 2023 into the historical tax matter and individuals who've left our firm. We've been working with the AFP to facilitate its attendance, and we will continue to cooperate with its investigation, he said. Despite the potential for distraction, let's all encourage our teams to continue business as usual and remain focused on their important work with our clients and in the community. The escalation of the police probe comes as Parliament prepares to hand down a report into the audit and accounting sector in light of the scandal surrounding PwC, with Green Senator Barbara Pocock saying the firm had lost its social licence. PwC has been in the public glare for more than a year after the firm was revealed to have used confidential government tax briefings provided as part of a private consultation around to construct new strategies for clients. The firm's former head of international tax, Peter Collins, was banned by the Tax Practitioners Board over the scandal, while PwC was slapped with a good behaviour bond. Mr Collins shared confidential government information with partners in the firm, with emails tabled to a Senate inquiry showing staff around the world were included in emails gloating about the briefings, but the exposure of the firm's failures triggered a second wave of outcry, with Treasury referring PwC and Mr Collins to the AFP for investigation over allegations that they disclosed official secrets. At least 9 partners have exited PwC in connection to the tax scandal, with 4 currently subject to the AFP probe. The AFP said its PwC investigations, dubbed Operation Alicia, was examining an allegation involving the disclosure of confidential information by a former partner of PricewaterhouseCoopers. Operation Alicia is examining whether former PwC partners breached Section 70 or Section 90 of the Crimes Act, which relate to the disclosure of information and official secrets. At the time, the AFP said it had designated the matter a priority and a sensitive investigation. The AFP will appear at a Senate estimates on Tuesday next week. And that's it for this week. And next week I'll be talking to Andrew Jobe, who developed PlotLogic, a tech outfit that helps customers including BHP, Vale, South32 and leading lithium company Pilbara Minerals to precisely understand the location and mineral properties of every rock in their mine in real time, increasing output and reducing waste and environmental impact. And I'll be talking to EY economist Sherelle Murphy about Australia's latest inflation and the response of the RBA. For the most exclusive access to leading economists and business leaders from around the world, subscribe to Talking Business from my website leongettler.com. If you like Talking Business, please leave us a review with Apple Podcasts. Thank you in advance. In the meantime, you can find me on Facebook, Twitter, or X as it's now known, Instagram, LinkedIn and YouTube. If you want to contact me, email me at leon@leongettler.com. I answer all emails. Also, in my spare time, I have a copywriting business. If anyone needs newsletters, blogs, articles or advertorial, email me. Wishing you all a safe and healthy week and looking forward to bringing Talking Business next week.